All right, Amazon's latest quarterly results were a mixed bag. We got some bad items and we got some good items. In this particular video, I'm going to emphasize the good news that Amazon stock investors received and exclude the bad news, which were two things primarily. I'll kind of touch on those in the video, but this is not going to be about that. The two things that sent Amazon stock price lower was the forecast for the quarter ahead and the large capital expenditure number the company highlighted for 2025. Other than that, I thought Amazon delivered an excellent quarter, and I'll highlight some of the items that was great news for Amazon stock investors.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So there was a pricing study done by Profitero, and their study found that entering the holiday season, Amazon had the lowest online prices for the 8th year in a row, averaging 14% lower than other leading retailers in the United States. And when you couple that with the fact that Amazon gives you the fastest delivery out of any of the other retailers, you get a good customer value proposition, which is one of the more important steps in my 6-step framework for evaluating stocks is the customer value proposition. How much value do customers feel like they're getting with your business? If they feel like they're getting good value with your business, they're going to keep coming back, and new customers that find your business are going to stick around longer because you offer good value. It's an indication of future success. Speaking to the customer value, Amazon expanded the number of same-day delivery sites by more than 60% in 2024, and they now serve more than 140 metro areas. And imagine how much people like the 2-day delivery promise that Amazon offers. Imagine if they can offer you same-day delivery on almost every item that you can imagine. That will really get people excited about using Amazon's website. And they have 140 metro areas. I don't imagine they need to get to every area with same-day delivery. If they can just hit the major cities in the United States and other places in the world, places like Los Angeles, New York, Miami, Chicago, San Diego, San Francisco, etc. If they can hit all those major cities with the same-day delivery, I think that will target the vast majority of the population, and they can do that cost effectively without having to try and do same-day delivery for some rural areas or some areas with smaller populations that may not be cost effective. So Amazon also said that they are focused on the cost to serve in their fulfillment network, which has been a meaningful driver of our increased operating income. We've talked about regionalization of our US network. And I've been speaking to this point for, I want to say 8 quarters now with Amazon, maybe a little bit longer than that, how Amazon has done a great job in lowering their cost to serve customers. They found little ways to do that, right? Putting more items inside of each box, getting people to delay their delivery by offering them, sometimes when I make an order on Amazon, and let's say I have a delivery coming on Friday, and then I order an item that's scheduled to be delivered on Tuesday, Amazon will give me an offer and say, hey, this package that you want to get on Tuesday, what if we bring it to you on Friday instead? And we'll give you a $1 credit for delaying that delivery to Friday, right? And sometimes I might choose that if it's something that, I don't mind waiting for. But I imagine many individuals choose that, especially if it's like not that much of a delay, especially if it's like going from Tuesday to Wednesday or from Wednesday to Thursday, just one more day longer. And sometimes they'll offer you $1, sometimes they'll offer you more. It depends on the price of the thing that you're buying. And so that allows Amazon to reduce the number of trips from 2 to 1 and put more things in the same box and lower the cost to serve. So things like that, those types of initiatives have been working really well. And I've been talking about how Amazon's operating income has been soaring in recent years. And that's one thing. Another thing was the regionalization of the network, getting closer to buyers and using their data to understand what people buy, when they buy them. And so having the right inventory in the right place helps Amazon lower the cost to serve, being closer to the customer. And so they say their per unit transportation costs continue to decline as they build out and optimize their last mile network. They've reduced their global cost to serve on a per unit basis for a second year in a row, while at the same time increasing speed. So these are situations I love to see from businesses because they're increasing the customer value, which I talked about how important that is, right? So they're increasing the customer value. But while they're increasing the customer value, they're lowering their cost to serve that customer. And so that adds so significantly to Amazon's competitive advantage because they're doing so two things at once. And it's difficult for the competition to find these kinds of opportunities. These kinds of opportunities are rare in business, where you can find a way to improve the value you offer to your customers while at the same time lowering your cost to serve your customers. That gives you a great competitive advantage against rivals that may not be able to identify and implement these kinds of opportunities. These are the kinds of things that result in sustainable profits, sustainable cash flow. These are things that are tangible and long lasting, and things that deliver great shareholder returns in the longer run, because it's not something that happened just in this one quarter, just this one time, and it's not going to happen again. This type of thing is something that further separates Amazon from its competition and makes its competition that much weaker while making itself that much stronger. And so it lifts it into a sphere of its own. And the really great thing for investors is that Amazon said for 2025 and beyond, we see opportunities to reduce costs again. So it's not like they said, we've looked at everything and that's it. We don't have any more opportunities. No, they're saying that they have more opportunities ahead. Another great news for Amazon, the advertising business continues to thrive, and this is a lucrative, high-margin business. It generated $17 billion in revenue in the quarter, and that was up 18% year over year. This is along the lines with other advertising-supported companies. Amazon was on the higher end. If you think about all the ad-supported companies like Meta, Alphabet, Pinterest, Snap that have reported results so far, 18% is on the higher end of all of those companies that reported in terms of revenue growth. So on average, Amazon likely gained market share in the most recent quarter in the digital advertising industry. And again, they see runway for even more growth. So these items that I highlighted here in this video were great news for Amazon stock investors. Admittedly, it wasn't all great news, and that's obvious by the fact that Amazon stock price fell after the quarterly earnings results, but there was a lot to like from Amazon's latest quarter. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.